Hello everyone, George DeSantis here with a look at the market for the week ending October 28, 2016. And as usual, let me read the disclaimer before we go any further. Trading and investing has large potential rewards and large potential risks. This video's presentation is designed for educational purposes only and is not a solicitation or advice to buy or sell any securities or other tradable instruments. You must be aware of the risks and be willing to accept them in order to invest in the markets. So consult a licensed professional investment advisor for investment advice. This is not investment advice. It's educational in its nature. So here's the monthly chart of the S&P 500. It moves very slowly because it is a monthly chart, each bar representing 1 month's data. Right now we can see that the Kalman filter is above the instantaneous trend line. So on the monthly chart, the trend is still up. However, we should note that we've had this topping process here where we had a nice bullish bar, but then we had a doji, another, and now we have a bar that's closing near the end, near the bottom of the prices for the month on this bar here, the current month in October. So we're coming to the end of the month here now, and we are at the end of the month. And we can see that the parabolic is still below the most recent bar. So technically the trend is still up, but showing some weakness here. As far as MACD is concerned, as I mentioned last week, MACD is just hovering around the zero line. So it's sort of directionless right now. And as far as Elder Force Index is concerned, at the bottom of the chart, we have been trending down a bit. Not a bit, we've been trending down. So the monthly chart is still in an uptrend, but it is showing some weakness. Let's take a look at the weekly chart. Here's a weekly chart of the S&P 500. It's not the same one I like to look at because that one got corrupted somehow and doesn't appear the way I'd like it to appear. So I'm showing you this one. Right now we can see that for the first time since February, back here, end of February, early March, the Kalman filter crossed back below the instantaneous trend line, and that is the Mesa signal for a downtrend. So we now have a downtrend on the weekly chart. How far down is down? We don't know yet, of course, we can't tell that. However, what we can see is that parabolic is now above the most recent bar or bars the last 2 weeks, and we also have a bearish engulfing candlestick here. This body of this candlestick totally engulfs the previous one. So that's bearish. And we are in a downtrend insofar as the Mesa indicator relationship of Kalman filter to instantaneous trend line is concerned. If we look at MACD, we can see that MACD is now below the zero line. It has been that way, of course, since the fast average crossed below the slow average. And also on this chart, we see CCI. CCI has now dropped below the zero line. So all of these indications that we are in a downtrend on the weekly chart. As far as RSI is concerned, I put it on here. RSI 12 began to lose strength back here when it crossed below the 60% line. It's still above 40%. So there's a little glimmer of hope here, unless it drops below 40. There's still a chance we might begin to reverse this downtrend that we saw for the last week or two, a couple of weeks now on the weekly chart. So let's take a look at the daily chart. So here's one of the daily charts of the S&P that we often look at. This is one where we have the 9 EMA and the 30 weighted moving average. The 9 EMA being the yellow line and the 30 weighted moving average, the light blue line. The 90 weighted moving average is this dark blue line. So what do we have? We have the 9 crossing below the 30 way back here, somewhere around the 10th. Let's see, that would be the 11th of October. Okay, and since then it's remained below the 30 weighted moving average, which really signals a downtrend. So we've had this downtrend on the daily chart for some time now. For the entire month of October, we might say, or most of it. The parabolic remains above the most recent bar. So the parabolic signaled a switch to a downtrend way back here, and it's still be above the most recent bar. Now, another thing that I'm noticing here is, if you take a look, we made a low here. We made a low here, which is very similar to this, a little lower than this. And we made a low here. So around this 2120 level, which seemed to be a support level, we had a low, a double low, a triple low. So the question now becomes, is this going to manifest as a triple low? Do we trend up from here? Big question. Bulls would love that answered in the positive, in the affirmative. And of course, the bears would like to see us go lower. Oh, so now RSI 12 is just sitting at the 40% line. In fact, it's at 39.79. So that's really at a very critical level. If we stay there, or if we go below the 40% line, we're becoming more and more oversold. We will see some more oversold indicators as we continue during this session. Williams Pro Buying indicator became bearish back here. We started getting some lower highs and lower lows. We made a false breakout here. This was that false breakout, and continue to go lower. And also percent R is now sitting at 20%. Now, use RSI, percent R can be used as a momentum indicator, as well as it's an oscillator, and it can be used for overbought and oversold levels. But it depends on whether you're in an uptrend or if you're in a cycle mode, if you're in a trend mode or cycle mode. And right now, we're in a downtrend, so we're in a trend mode, and percent R is hitting that 20% level. So the market is showing us that there is some weakness here, and the big question becomes, is this a triple bottom, and do we go rallying from here, or is there more pain for the bulls? We'll find that out real soon. Let's take a look at another chart. Now here's another chart of the S&P 500. It is one on which I have the Bollinger Bands, and also Jerry Appel's sum of the rate of change indicator. Now, it's interesting to note that since that indicator crossed below the 4% line, it has remained there. And of course, during that time, the market has crept lower and lower and lower. It's been creeping lower and lower. So this indicator gave us a very early signal that this market has changed direction. Now, the Kalman filter here is below the instantaneous trend line. This is where we got that signal. We saw it earlier on the other daily chart with the 930. We got an early signal. And the parabolic is above the most recent bar. We can see that triple bottom or possible triple bottom here. Now, if we look at MACD, we can see that when the S&P daily made a low here, MACD made this low. As the bulls tried to take charge, and there was a false breakout here, the bulls tried to pull the market up, and then the bears took over again. However, bears at this level were not as strong as they were here. So there was a divergence. Now, when we go further and we look at this bearish drop here in the market here, we can see that bears are even weaker than they were here. So in a sense, MACD is seemingly giving us an indication that we may very well see a bottom, that this triple bottom might really be a very positive, a very good indicator. So we'll see how that develops. But it clearly looks as though, yes, this has been a downtrend, but it seems the bears are losing strength. Does that mean we reverse the trend here? We'll find that out. Now, percent R, as we saw earlier, is in oversold territory. Let's take a look at the NASDAQ. Now, here's a weekly chart of the NASDAQ composite. Interesting chart, no doubt. we can see that the Kalman filter is still above the instantaneous trend line. In addition to that, we can see that the parabolic, you can't clearly see it here, but let me close this window here first. You can see that the parabolic is still below the most recent bar, although it's coming pretty close to being hit by the current bar of the Nasdaq weekly. Now, the important thing to note is that we still have an uptrend in the Nasdaq weekly because the Kalman filter is above the instantaneous trend line. And I had that window up earlier, and we can see what it says. This is the expert indicator. The market is currently in an upward trend mode. The trend mode is usually characterized by erratic behavior of the phase display and the sine wave indicator. Dominant cycle may be changing. The best strategy is to establish a long position and hold until the end of the uptrend. So folks, what we have is a conflict of data here. The Nasdaq is indicating on the weekly chart that we still have an uptrend. The S&P, the broader market, is indicating that we are in a downtrend. Now, coming back to the Nasdaq weekly, we can see that we have two pretty big bearish engulfing candles, this one and this one. Last week, we had a very bullish and bearish engulfing candle again. So there is a conflict here. The Nasdaq, if it leads the rest of the market, as many folks think, then it is telling us we're still in an uptrend, and the rest of the market might follow. We saw that we might have a triple bottom on the S&P. If that's the case, Nasdaq is leading us to lean on the side of maybe we have a triple bottom here. Now, Nasdaq is also showing that the percent R is still above 50%. Although it's broken below 60, it's still above 50%. So it's still some strength here. MACD is trending down, and it's now at -6, so it's below the zero line. But we do not have a bearish divergence, which is more significant than just a downtrend of MACD. So the question is, do we find support at the 2120 level again on the S&P? Does the Nasdaq find support here at about 5100? And this is really a critical juncture for the whole market. So we'll find that out soon. And before we end today, let's take a look at the stock charts chart that shows us the impulse indicators that Alex Elder has written. So right now we can see the weekly chart is showing us red bars for the last 3 weeks here. So that's indicating that we should not be doing any buying insofar as a longer term position is concerned right now. So the weekly chart is showing us red bars, but notice the Elder Force Index. Elder Force Index is showing us a divergence. In other words, when the market made this low here, Elder Force made this low. When the market made a lower low, Elder Force made a higher low, etc. And more recently another higher low. So we're getting a divergence here, which gives us some hope that the 30, this red line here, will hold as support, the 30 weighted moving average. And this level of 2100 or so should hold as support. Let's take a look at the daily chart. Now, clearly, the daily chart is in that downtrend that we've noticed before. We see the triple bottom here. Hopefully, that will resolve itself in a bottom of this downtrend, and that we rally from here. We'll see how that turns out, if that turns out to be the case. And again, if you look at Elder Force, you can see a low here on Elder Force, a lower low, slightly lower low. Elder Force is making a higher low, and a low here again, Elder Force is making a higher low. So we have this divergence as we saw on the weekly chart too. So that's what I wanted to point out on this. I think the market is getting ready to make a bottom here, and we'll see how that develops. That's my take, okay? Have a nice weekend. I hope you had a good weekend. This is Sunday night, and we'll talk to you again next week.